Hello and welcome to this carrier update brought to you by PowerFleet. I'm here back with Zach Strickland. Zach, who do you have?
Yeah, let's go through this one a little bit faster this time. So tender volumes came down. Now they're starting to rise again. Tender rejection rates have been on the rise for a little bit, over 20% for the first time since early, I should say October out there, but dipped below 20% for the first time in 13 months. Now back on the rise. Expect to see it rising a little bit faster here as we approach the holiday due to the fact drivers coming off the road. Let's go to the next one. Let's look at the tender lead times compared to the tender volume index here. So tender volume index still here. We've got our lead times that have been on the rise. The distance between the shipper request and their shipper requested pickup date. So we're getting closer and closer to 3 days being a normal for a lot of these loads, which is very unusual for the overall market itself. Had a big jump in it last week and now it's come back down. That's unusual. Normally the closer you get to Thanksgiving, we start to see those lead times really start to increase as shippers start to take things offline, and getting ready for that holiday. Obviously next week we'll probably see this thing jump up again because people will be booking freight to come back off the holiday with. Very inconsistent pattern there. Carriers tend to reject those a lot more because they don't know what they're going to walk back into on Monday when they come back. So this is an interesting thing though, because it's coming down means that there's going to be more freight moving next week. Shippers still have that need to ship stuff before the holiday. Let's go to the map and see where exactly some of this tightness is occurring most significantly. Anything in the blue on the weighted rejection index map indicates tightening. Anything in the reds or oranges, loosening signals. Memphis showing up as a loosening signal. Jacksonville, only 2 spots in the country right now showing some loosening signs. Everything else is either neutral or tightening. Ontario, Phoenix, Salt Lake City, all on the West Coast, all showing the most significant tightening signals in the United States right now. This is a big deal because a lot of freight is sitting out in Ontario. The Inland Empire out there in Los Angeles is in that Ontario market, and most of that freight comes back east. So West Coast is now getting abandoned a little bit more by carriers, and they've been trying to drive back in there. And Mike Vincent and I, he just made a solid point as I came off the set last time. Is it because a lot of these drivers aren't going back out there? Because of that whole, it's about to be the holiday. Right. A lot of drivers don't live, these long haul drivers do not live in Los Angeles. They do not want to live out there. They typically live out east, somewhere in the 40 corridor or in Chicago or somewhere in the Midwest, more than likely, because that's where all the freight action is. That's where a lot of the carriers are. Unless you're a regional carrier, you are not in California, more than likely. Cost is way too high. So carriers are they're going to accept less freight into that market. And so let's look at the chart and see exactly these numbers that are behind this on the West Coast. So you've got Salt Lake City, Atlanta here in the red line, and I just showed that up because it was in the lighter blue. It's taken a little bit of an increase. It's still relatively low compared to where it's been. It peaked out over the summer at 30%, and now we're at 17. It's starting to climb up. This is just a holiday impact. So Atlanta, yeah, it's getting a little bit tighter. Don't think too much about that. These 2 markets, however, Ontario, biggest market in the United States, jumping from roughly 16 to 19, near 20% in the last couple of days. That's a big deal. This market's already tight. The rates are already high. This area right here is going to produce some serious spot market action here over the next few days, more than likely. No different here in Salt Lake City. Anytime we see one of these guys, where you see these big jumps, big sign, spot market activity. Let's look at the next chart and see some of this track spot market in action. So our market dashboard recently released spot rates representing, we've got several dozen carriers, or I should say people contributing to this. 25%, you have to have no more than 25% contribution, no more than, and you have to have at least 5 contributors in each lane. So there's a big base of people that are contributing to this, and it's statistically dispersed. So you have a lot of representation of the market here. So these rates coming up, Ontario to Atlanta right here over the last bit, and they took a big jump right here over the last few days. $3.58 is the average rate. So definitely gonna see, this has a good chance of getting even higher, Anthony Smith, because this is that long haul freight coming across the United States. Let's look at the next one real fast to kind of see what's happening in Salt Lake City. It was not really doing much. I mean, it had kind of tightened towards the end of October. It was easing, and now look, it just looks almost exactly like our tender rejection index. And this is just for van. I looked at the reefer, and the reefer is a lot more significantly higher. So both van and reefer out of Salt Lake City. Notice the rate, though. This is going back to Los Angeles.
Yeah, yeah.
It's much cheaper. But again, that holiday impact doesn't care about a backhaul lane.
Right, and I mean, you always mentioned, and Donnie mentions as well, a lot of the times it's strategically priced on the front end to make your money coming back. But Zach, thanks so much for this carrier update. We appreciate your insights throughout the day.